Fundstrat's Tom Lee has been one of Wall Street's most consistently bullish voices. In his latest CNBC appearances this January, including Squawk Box and Closing Bell, he's doubling down on optimism for the year ahead, but with some important caveats. Here's the key takeaways, so you don't have to watch hours of interviews. First, the big one. Tom Lee still sees a bull market extending into its fourth straight year of strong gains. He targeted the S&P 500 hitting around 7,700 by the end of 2026. That's roughly 10 to 15% upside from where we closed 2025 near 7,000. In early January, he reiterated there's a lot to be optimistic about in 2026. Why? Strong fundamentals, continued earnings growth, and policy tailwinds under the current administration. But he warns it's not going to be a straight line up. Expect a correction or even a bear market-like phase, potentially 10 to 20% pullback in the S&P at some point in 2026. He calls this bumpy road a classic buying opportunity. In his words, use any dip to accumulate quality stocks because the long-term trend remains higher. He's particularly bullish on sectors like energy and basic materials right now, citing them as top picks of the year amid rotation away from megatech dominance. Tom Lee remains one of crypto's biggest institutional cheerleaders. Despite some near-term volatility, he believes the 4-year Bitcoin cycle is still intact, and the top is not in. He predicted Bitcoin could hit a new all-time high as early as January 2026, driven by a stock market rebound, and potentially more dovish Fed signals boosting risk assets. He sticks to his longer-term bullish targets, including Bitcoin potentially reaching $250,000 in a supercycle scenario. That said, he's realistic about 2026. Expect painful trading and a possible 10 to 15% crypto pullback early in the year due to White House policy risks, Fed uncertainty, and deleveraging. Ethereum he calls grossly undervalued and sees it exceeding $12,000 in a strong scenario. His advice? Dips are opportunities, not reasons to panic sell. Crypto leadership is shifting, but tailwinds from institutional adoption and macro factors are building for new highs later in the year. Overall, Lee's message is balanced optimism. The macro setup supports risk assets, but 2026 could see sector rotation, volatility from policy shifts, and a needed breather after 3 years of 20% plus S&P gains. He emphasizes diversification. Don't chase last year's winners blindly. Gold, energy, and even selective crypto fit into portfolios during transitions. He also highlights generational investing changes. Younger investors are more open to alternatives like Bitcoin as part of the mix. Bottom line from Tom Lee: stay invested through the bumps. The bull market has legs. Corrections create entries, and 2026 could still deliver solid returns if you play it smart. Thanks for watching this quick recap of Tom Lee's latest views. Markets move fast. Hit like if this saved you time, and subscribe for more condensed insights from top analysts. This isn't financial advice. Always do your own research. See you next time